Let's rewind the clock. Imagine it's 1985. You're 18, you've just started your first real job, and you decide to put a little money into the stock market. For a few years, it feels like you can't lose. You feel smart. Then, the floor drops out. It's being called Black Monday, the worst single-day drop in Wall Street history. People are in a complete panic down here. Up until this point, your friends probably thought you were some kind of genius. Now they're begging you to sell. Get out while you still can, they scream. But you don't. You hold on. And slowly, painfully, the market climbs back. You feel vindicated. Until the next one. The Nasdaq is in free fall, down nearly 10% as the dot-com bubble implodes. Trillions in paper wealth gone. This time, your friends are on their knees. Take your profits. You're going to lose everything. But you hold strong again. Things recover. You're riding high. And then the world is hit with the biggest one yet. The worst financial crisis since the Great Depression. Banks are failing. Surely, this is the end of the stock market. This time, it has to be different. But as the world reopens and adapts, the market does what it has always done. It storms back, gaining over 25% from its low and setting new records. Here's the part of the story I don't always mention. That 18-year-old kid investing in 1985, from the crash of '87 to the dot-com wreckage to the 2008 meltdown, the average annual return across that entire chaotic period? Just over 11%. Let me show you what that means. If I had only managed to invest $250 a month during that time, my total would have grown to over $1.8 million. That's a return of more than 6,000%. And between us, was able to invest a lot more than that. So now you understand the real power of investing. It's not about timing the market perfectly. It's about time in the market. Listen, if you're serious about taking your finances to the next level, you don't want to miss what's coming next. Hit that subscribe button right now and join the community. We're talking investments and the strategies they don't teach you in school. I'm James, and I'm here to guide you every step of the way. Don't forget to tap the bell so you get notified the second we drop a new video. You won't just be watching content, you'll be building your future. Subscribe now, and let's get started. Everyone talks about investing, but almost no one actually shows you the mechanics. So today, I'm going to walk you through exactly how to invest using just your phone. Before we touch a single button, we need to get one thing straight. I'm not a financial advisor. This is simply the system I've used for decades. And before you invest a penny, you need a safety net. 3 to 6 months of living expenses saved up in a regular bank account. That's your umbrella, so you don't have to panic when it rains. Step 1. Open the right account. Most people get stuck here because there are a million apps and a million account types. It's simpler than it looks. When started, physically call a stockbroker and wait on hold just to buy a single share. Now, it takes 2 minutes. We're going to use an app called InvestEngine. I like it because it's designed specifically for the kind of long-term investing I want to teach you. No clutter, no distractions. The most important thing is to open a tax-efficient account. In the UK, that's called a Stocks and Shares ISA. Think of it as a tax-free bubble. You can put in up to £20,000 every year, and every pound of profit you make is yours to keep. The taxman never sees it. And unlike some accounts, you can take your money out whenever you need it. Step 2. Add some money. Let's deposit £400 so we can actually buy something together. In the app, you hit Add Funds. You'll see options like bank transfer, debit card, or Apple Pay. Let's use Apple Pay. Boom. Money is in. Step 3. The winning strategy. The first thing to understand is that picking individual winning stocks is incredibly hard. Even the professionals get it wrong most of the time. That's why I don't try to pick winners. Buy everything. This might sound crazy, but stay with me. Think of it like a library. You don't walk into a library and bet your entire education on a single book, right? You want access to all of them. An index fund is exactly the same. Take the S&P 500. It's a list of the 500 largest public companies in America. The heavy hitters: Apple, Microsoft, Amazon, Google. If one company starts to struggle, it gets removed from the list and replaced by a stronger one. The index self-cleans. With one click on an S&P 500 index fund, you're not betting on 1 or 2 companies. You're investing in all 500 of them. If Tesla has a bad year, it doesn't matter because you also own Microsoft and Johnson and Visa. Your risk is spread so thin, no single failure can hurt you. Step 4. Automate everything. This is the secret sauce. My nephew, who's 19, started a little experiment on this app 3 months ago. He set up an automated investment of £5 into a global index fund every single day. Why £5? It's less than his daily coffee and sandwich run. Automating means you set it and forget it. You remove emotion from the equation. You stop trying to guess whether today is a good day to buy. You just buy always. His account is already up over 5%. It's not life-changing money yet, but it's proof that the drip feed works. To set this up, you go to Automated Investing, pick your fund. I usually choose an accumulation fund, which automatically reinvests any dividend so you don't have to think about it, and then set your amount and frequency. The app even has a projection tool based on real historical data. Watch this. If you invest £250 a month for 30 years, you will have personally contributed £90,000. But your portfolio could grow to over £1.1 million. Extend that to 40 years, and you're looking at £3.5 million. That's the magic of compound growth. And for those of you worried about inflation, if your money is growing at 8 to 10% in the market, you are outpacing inflation. The only people who lose to inflation are the ones leaving their cash rotting in a bank account earning 0.5%. Step 5. If you must pick individual stocks. I don't recommend beginners do this, but I know some of you will, especially after seeing stories of random stocks skyrocketing overnight. So let's talk about it. There are 2 ways to analyze stock. Technical analysis is what day traders use, staring at charts and patterns, trying to predict the next 5 minutes. That's not me. I use fundamental analysis. I want to know the company's financial health. Who runs it? Do they have more debt than cash? Are they actually profitable? To find a stock, just hit the search icon. Let's pick a company like NVIDIA as an example. Scroll down past the price chart, and you'll find the financial documents. The income statement, the balance sheet. That's where the truth lives. If you're not willing to read those, you shouldn't be buying individual stocks. When you're ready to buy, you have 2 choices. A market order means you pay whatever the current price is. A limit order means you set a price you're willing to pay, and the app only buys if the stock drops to that level. For beginners, market orders are fine. Let's buy £400 worth of NVIDIA so you can see it happen. And just like that, we're owners. A tiny piece of a massive company. Step 6. The only thing left is time. So now you know the steps. You know how to open the account, deposit money, buy a fund, and even pick a stock. What's holding you back? The most common question I get is, isn't this risky? Look at this chart. If you start investing at 25, your money has 40 years to grow. Look at the line. Now look what happens if you wait until 35 to start. See that massive gap? That's the cost of waiting. That's the real risk. If you own a diversified portfolio of index funds and you keep buying consistently through the highs and the lows, history shows you will weather every storm, just like I did. If you want to understand why your net worth seems to explode once you cross $100,000, I will make a video all about that. It's linked right here. But don't click away yet. Hit that subscribe button if you want to build real wealth over time. Thanks for watching. I'll see you in the next one.